You said in your very first slide, or you raised the question in your very first slide, when will India achieve double-digit growth? But you did not answer that. So let me ask you that question. When do you think that will happen? You said in one of your last slides that you needed to get the trend growth up. So when will you get it to double digits, and what are the main steps that might be needed to raise trend growth to that level? And then second, on inflation, you predicted that WTI inflation would hit 5.5% this year. Are you satisfied with that? Do you regard that as a satisfactory long-run pattern for inflation in India, or would you like some lower inflation target? 2% like most of the rich countries have adopted, 4% like the chief economist of the IMF has been promoting. So talk a little more about those two parts of the longer-term growth prospect.
Thank you. Can you all hear me? Mic working?
Yeah.
Okay. On the first question about the trend growth rate, as I said, for this year, 10-11, the Reserve Bank projection is 8% plus. The Prime Minister and the government have talked about 8.5 to 8.75%. And the Prime Minister has tasked the Planning Commission headed by Monte Ahluwalia to see what needs to be done to take the growth to double digits, 10% plus. I believe that the potential for growth in double digits is there. The scope for productivity improvement, the scope for efficiency improvement, the scope for savings to go up for double-digit growth is all there. We need to do a lot of things at home, and a lot of things need to happen around the world for India to achieve double-digit growth. What needs to happen around the world is quite clear. Global situation has to recover to at least normal. That's necessary but not sufficient for double-digit growth. At home, there are lots of things. In fact, I'm thinking on my feet as I speak because I've not collected my thoughts. First, we need to get productivity of agriculture, actually, growth rate of agriculture to 4% year on year. Productivity levels to go up. People compare productivity in India with China, with other countries. That's not the question. Even if some of the bigger states achieve productivity levels of Punjab in India, we will have a big takeoff on agriculture. So agriculture is important. We need to raise the growth rate, if only because...
Sorry, excuse me. I can't hear you in the back.
Yeah. If only because we can't continue to employ 55% of the people in the agriculture sector. That's number one. Number two, there is a view that India had been unique in the sense that it leapfrogged over the conventional economic model. It jumped from agriculture to the services sector, completely bypassed the manufacturing sector. That is true to a point, but I think going forward, we need to focus on the manufacturing sector. If agriculture, in fact, grows at 4%, it's going to throw out 100 million people out of the agriculture sector, and they have to be found jobs, and there is no way the services sector is going to absorb 100 to 150 million people. So we need to get manufacturing sector focus on that. Third, I think we need to focus on the quality of expenditure. We spend a lot of money on anti-poverty programs. As I had said earlier, India was notorious for the amount of leakage there used to be. That's improved. But we need to improve the efficiency of expenditure, getting more for every rupee we spend in a very, what should I say, in terms that you can relate to. See that all the teachers that we pay salaries to, they actually teach in schools. All the doctors we employ actually go to the rural clinics and treat. All the money that we spend on medicines is actually spent on dispensed to people. So I think we need to focus on the quality of expenditure. I'm thinking again, thinking on my feet, as I said, I'm not prepared for this. But we need to, I think, adjust the globalization. In going forward, India is going to be more integrated. How we conduct, how we manage our policies is going to be dependent on what happens around the world. It's not like in the earlier times that we could autonomously do whatever we wanted. We realized before the crisis, we realized during the crisis, we now realize after the crisis that we need to adjust to the rest of the world.
Could I ask just one more question and then turn it over to our senior fellow Arvind Subramaniam, who's our expert on India. Let me just ask one more question on this big transition that you postulate from agriculture to industry. It's obviously got big international implications. If 100 to 150 million additional Indian workers are going to be producing manufactured products, some of that will be for export, some of that will add to the world economy and raises interesting international questions. But let me ask a domestic question. Our colleague Nick Lardy, who works on China, has calculated that when a Chinese worker moves from the rural western part of the country, working in agriculture, to the modern coastal sector in manufacturing or services, her or his productivity goes up by a factor of 15. And this has been one of the huge sources of rapid growth in China. And since that transition in China is only about half through, it also suggests that China will continue to grow very rapidly. Do you have any figure like that in India? Any estimate of the payoff to overall Indian economic productivity and growth as that transition occurs from agriculture to manufacturing and or services?
No, I have no number, but I'm sure that we have as much advantage as China has, perhaps more. But I don't know, there are lots of India experts, Professor Krieger, Deepak, do you have a number? 8?
8, but still a huge increment to the economy, which then gives a lot of reason for optimism as you go through that big structural change. Arvind.
Thanks, Fred. Thank you, Governor. Perhaps just picking up on one of the things that you mentioned about how finally the Dow responds to Indian monetary policy. I think that's a segue into the question about India's role in the world economy, and there's some very interesting material later on as well in your presentation. So I want to ask you two questions. One is, of course, as capital flows pick up to India, you've been, to be fair, I think you've been kind of, in a sense, openly expressing your conflicted state of mind about capital controls. And so would you contemplate them under what conditions, or would you do a Brazil in short, and under what conditions? That's first. The second, of course, is that, one of the headlines over the annual meetings has been the fact that Brazil and you and your counterpart in Brazil actually did speak up against the Chinese exchange rate. So could you tell us a little bit about what went into that? I mean, how do you see the whole global economy in terms of capital flows to emerging markets, how your response is or is not affected by Chinese exchange rate policy? All roads, unfortunately, seem to lead to China these days. Sometimes they go via India, but at least if you could respond to them, yeah.
Thank you. Capital flows was a big issue in India before the crisis. It was a big issue during the crisis. It's now a big issue after the crisis. And in my own limited experience of managing capital flows in the government before the crisis, and now in the Reserve Bank after the crisis, I've realized that there is a law about capital flows, that they never come in the exact quantity or at the exact time you want. Okay? And there is a no-win situation. In fact, over the last 3 days in the bank fund meetings, G20 meetings, as you've all seen in the newspapers, capital flows into emerging economies was an issue. India is somewhat unique in terms of managing capital flows because we have a current account deficit. So the room for letting the rupee appreciate is much less limited for us than for other economies. So the familiar concerns about capital flow management are all there. If we don't intervene in the foreign exchange market, there is the concern about appreciation of the rupee. If we intervene and don't sterilize, there's concern about inflation. And if we intervene and sterilize, there's concern about the fiscal costs and about interest rates going up and about the competitiveness of the economy. So it's an absolutely no-win situation. In India, actually, we have used capital controls in the past, somewhat effectively. I wouldn't say completely effectively, but more effectively than most people, most countries. And I would say that if there's a surge of capital flows going forward, we will employ capital controls. I also want to say, because this is an open forum, that yes, we will move towards complete capital account convertibility in course of time. The roadmap for that we will adjust on a dynamic basis, learning the lessons of the crisis. But in the short term, should it be necessary, we will impose capital controls. There is also a view that in India we have a preference for quantity-based controls as opposed to price-based controls. I think that's inaccurate because we have used price-based controls on NRI deposits. I see in the audience here quite a few NRIs. And for NRI deposits, we use the interest rate, which is a price-based variable. For external commercial borrowing, under the automatic route, we only say what interest rate people can borrow at. So that's a price-based variable. There are also quantity controls on FII flows, on amount of external financing of the fiscal deficit. So there are price-based controls, there are quantity-based controls, and we are quite agnostic about what measures we use. The final question people ask me, and let me deal with that, is will we think of a Tobin tax or something like a Tobin tax? My answer is that depending on what flows come in, we will employ measures, including, if necessary, something like a Tobin tax or a Tobin-like tax. At the moment, we're not contemplating one, and I don't believe there will be need for one, but it's not off the table. That's the answer to your first question. Second, on the exchange rate issue. Let me extend your question and say people have told me that this is your exchange rate policy in writing, this is your exchange rate policy in practice, and there is a hiatus between what you say and what you do. I think that's wrong. Okay? We have rewritten our exchange rate policy in plain English in the recent policy document, so please go and look at that. It's just a difference in English. There's no difference in the actual import of the policy. And the import of the policy is that we intervene in the market only to manage volatility in exchange rate and to prevent disruption to the macroeconomic situation. We're not targeting a rate or a band. So to that extent, I think our exchange rate policy is not completely flexible, but certainly more flexible than that of some other economies. If the global system is one, and we have a more flexible exchange rate regime, and some other countries do not, we tend to get disadvantaged because the burden of adjustment will fall on us, and there is concern not only about competing in common export markets, but there's concern about imports coming and imports substituting, industries getting hurt. The last comment on this. Now people say that, look, how come import substituting industries are not agitating? They're not agitating because they're not organized like exporters. The rupee appreciates, exporters are an organized lobby, they can agitate. But those are affected by import substitutes. They don't even know what's hurting them. They know something is hurting them, and they don't realize what's happening.
But just on that last point, of course, that One manifestation, you're right that they don't coalesce and lobby like exporters, but one manifestation that they don't not feel the pressure is reflected in the fact of all the anti-dumping actions. You know that India is a big user of anti-dumping actions, and if you look at where they're imposed, they are predominantly targeted at those countries which we will leave unnamed for the moment that have relatively fixed exchange rate policies.
Yes.
So that concern may not be publicly expressed, but it does feed into, has fed in practice into demands for anti-dumping action, protectionist action.
That's slow, isn't it? Anti-dumping is a blunt instrument, or takes time to get into effect?
I mean, I think as these things go, it's a relatively speedy instrument. No,
Yeah,
you can slap on.
I know that India has resorted to anti-dumping action, yes, which is not the ideal thing to do in the best of all worlds, but yes.
Let me ask one more question on this, then we'll open it to the audience. I know you've been in around-the-clock meetings while you were here this weekend, and I understand that one of your meetings was with the other finance ministers and central bank governors of the BRICS. Mm-hmm. So the BRICS actually get together here, like the G20 gets together and G7 gets together and other groups get together. So that's a work in progress, obviously, this increasing cooperation among the BRICS. Do you find it to be a useful group for your purposes? Do you find it to be a cohesive group in terms of having common views on issues? And on something like Arvind just mentioned, the exchange rate, where you have publicly stated some difference with views at least one of the other BRICS, do you talk about that and make any progress on it when you get together with your colleagues?
You know, BRIC as a club of 4 countries is certainly a useful forum, and certainly a cohesive forum because it is smaller than G20. And there is a unity of interest on a number of issues that are currently on the table, such as reform of the IFIs, such as regulation of the financial sector, such as opening up of the capital account, such as capital flows. There is some unity of interest. To that extent, there is a common platform. But I do see that even within the BRICS, there can be different interests on certain issues. So I don't think it's going to be that BRICS are going to agree on every possible issue under the sun. But it helps to brainstorm on some of these issues before you go into a larger group.
So we'll wait to see whether we get a BRIC block. Okay, floor is open for questions and comments. Yes, 2 in the middle. We've got a traveling mic. We've got a standing mic in the back. Please introduce yourself, identify yourself, and then fire away.
Governor Subbarao. My name is Hasmukh Shah from Business Times. As you know, at present, the Wall Street is on the center stage on the Capitol Hill, as the Obama administration is keen to overhaul the U.S. financial regulatory system. In view of the present situation, India has a tremendously commendable record for having the fiscal and management prudent policies. So in view of this, what do you say, or what do you have your views? I would not call it an advice, but suggestions to the U.S. administration to put its own house in order. Thank you, sir.
Any country that can grow 8 to 10%, we need advice. So please feel free to convey.
Swami had a question?
No, let's answer.
Okay.
I do not want to presume to advise the U.S. on what they should do. They have a big problem, and I think they have done commendably in managing the crisis, because back in December 2008 and January 2009, everybody was so anxious, uncertain about what's going to happen. And it's commendable that the U.S. was so agile, policy-wise, that they'd gotten out of the crisis. Yes, you can always go back in time and say that you caused the crisis and all that, but that's not going to help. Okay? I think the U.S. had responded very effectively. Going forward, of course, there are a number of issues on the table, and some of them are relevant for emerging economies, some are not. And what we should allow for going forward is that there need not be complete unity on every issue. We must recognize that there are going to be differences on issues, and we must allow for those differences in implementation. Just to give you one example, compensation to bankers has been a big issue, is a big issue here. It's not an issue at all in India because we control what the public sector banks can get, and even for private banks there is code of conduct. We are of course going to adopt the principles laid down by the FSB, but that's going to be just to show that we're conforming. In practical terms, we're already quite controlled. So we have to recognize that there are going to be differences in how countries relate to issues and how countries implement decisions on common issues.
I'm Swami Iyer of the Economic Times. Governor, I'd like to have your view on to what extent do you think central banks can really pop an asset bubble, right? I mean, we had a situation here where Ben Bernanke and Alan Greenspan were accused of being serial bubble creators and not wanting to pop the bubble. And there was a certain amount of praise later on for India saying, you know, India leaned against the asset bubbles. There were limitations on the kind of loans Indian banks could give for real estate. There was a difference, I mean, the weighting, the risk weighting was brought down. And for retail fellows in India, borrowing to buy shares was extremely low limits. But at the end of it all, I note that in the USA, which was supposedly had this huge bubble, the stock market and property prices went up 100%. But in India, the Bombay Sensex went up from 3,000 to 21,000. So our stock market bubble went up 700%. Our property went up even more, despite these attempts of the RBI to lean against the wind. So then the question arises, can a central bank do very much when you get this kind of euphoria? And I would like to know you, when you see the next bubble growing in India, what are the kind of things that you are going to do?
You know, as far as I know, and in the universe of my knowledge, dealing with these asset bubbles is something new, okay? But the Reserve Bank, as an institution, has had a credible record of dealing with asset price build-up, I wouldn't say asset bubbles. And we did not have the Greenspan orthodoxy that asset prices and asset bubbles are something beyond the realm of the central bank. That's just not an ideological issue, but it's also a practical issue. Because unlike advanced economy central banks like the Bank of England or the US Fed, the Reserve Bank of India is a full-service central bank. We have multiple objectives and multiple instruments. So our ability to intervene against an asset price build-up is more than other advanced country central banks. Regardless, the question arises whether it is possible for a central bank to see ahead of time an asset price build-up and to act in good time. It's always difficult unless you have, it's with the benefit of hindsight, always you can see an asset price, but whether you can see it in real time is the question. The RBI had a credible record, as you yourself said, that in the years before the crisis, bank credit for certain sectors, such as consumer loans, for capital market exposure, for real estate, was restrained by using regulatory measures, not monetary policy measures, but regulatory measures to curb that. Yes, in spite of that, there was asset price build-up, but that I believe is because the Reserve Bank does not have control over the entire macroeconomic situation. Okay. So my own view is that, yes, central bank should be vigilant, should not take a purist view on this. I think looking at asset prices, looking at their trends, and doing something to manage them is very much within the realm of a central bank's mandate. But they must also realize that there is a cost to action, because you don't know once events have passed what the counterfactual would have been. If you called it wrong, there would have been costs to tightening, right? So it's very important as an institution to have the wisdom and to have the intellectual arsenal to detect asset price buildup. And some of my arsenal is present here. Okay.
Antoine?
Excuse me. Excuse me, sir.
Antoine van Hakmal, Emerging Markets Management, and we've been investors in India for a long time. There's no question that India, as you said, really had policies that mitigated the crisis quite substantially and was admired by many, to the point of jealousy, I think. But I wonder on one specific point whether India dodged a bullet. Just before the crisis started, you saw many of the emerging multinationals in India, including some icons of Indian industry, start to really go on a borrowing spree abroad. The crisis cut that off. Was that, in your view, dodging a bullet, or would you have felt comfortable with the borrowing that was going on at the time?
There has been a move in India to open up more for external borrowing. And over time, we have liberalized our policy for external borrowing, and we need to do that because of the huge investment need of the economy. We're talking about investment of $1 trillion for infrastructure, and there is no way the domestic system can generate that sort of investment resources. So we need necessarily to depend on foreign capital, whether it comes as equity or as debt. And we've opened up quite a lot. And I think we need to open up more, but we need to be cautious about how we do that. On the private sector, yes, we put some limits, but those limits are very loose. We have relaxed for infrastructure sector, and we take a very people call it discretionary, but I think it's important that we exercise our mind on each big borrowing demand beyond the automatic route and exercise our judgment about whether to allow it or not, depending on the cost, depending on the importance of that infrastructure sector. That's one dimension to the answer. The other dimension is that there has been pressure, there's been advice, there's been suggestion that we must open up our sovereign borrowing more to the external sector, that for financing fiscal deficit, we must access or allow foreigners to invest. There are very sound arguments in favor of doing that. But I believe there are equally weighty arguments against that. As indeed the crisis has shown, those countries which had opened up their sovereign borrowing to external financing had suffered more than those countries which have been cautious. So reflecting on the lessons of the experience, we will move forward. I think we need to be doing that in a very calibrated way.
Particularly with Greece as the latest data point.
Yes, Greece is very much on everyone's consciousness.
Latest but not the last data point.
Yes,
so
right.
hopefully not.
Let me ask another question, if I might. There's been a lot of discussion, including here this weekend, of the tendency of a number of emerging market economies to build their foreign exchange reserves for self-insurance purposes. Now, as you pointed out, India's recently been running current account deficits, but you've still had reserve buildup over the recent past because of the big capital inflows. And so you, too, have amassed a fairly substantial level of foreign exchange reserves. What's your view on the self-insurance question? Do you feel comfortable with the level of reserves that India has itself? How much do you feel you can rely on the IMF or private capital markets to supplant what you have now if that were needed in a future situation? Talk a little bit about the self-insurance issue, the large levels compared to historical levels of foreign exchange reserves that many countries, including India, have. How do you feel about that situation today?
You know, I'm not a professional central banker, and I've been coached after coming into the central bank about how I should respond. One of the things,
don't listen to those briefings.
one of the things people have told me is that when people ask you, are you comfortable with this? Duck that question. Because you cannot express your sense of comfort in a public forum. Okay? So about foreign exchange reserves, yes, we built them up. And as you've said yourself, they've been built up because of capital inflows, not because of a deliberate policy of building up reserves for self-insurance. However, since we had a war chest of reserves that stood us in good stead during the crisis when we could intervene in the market, and indeed our ability to intervene rather than the actual act of intervening itself protected us from the worst impact of the crisis. Okay? So, although unlike some other countries, we had not built up self-insurance reserves for the purpose of self-insurance, they did serve the purpose of self-insurance. Now there is a debate on, engineered by Arvind in the international fora, but about the costs to self-insurance, the benefits to self-insurance, and whether they're militating against regional and multilateral arrangements. I think that given the need to respond to the crisis situation in good time, for the world to realize that you're not at the discretion of someone else for managing your own situation, it's important to have a certain level of war chest yourself. How much that should be is a question. Then there are regional arrangements and there are multilateral arrangements. And the IMF, I think, is doing a commendable job, indeed bending over backwards, to remove that stigma from accessing IMF. But I don't know. It's a question of psychology. It's no more economics. About when the world will look at a country that is under an IMF arrangement or IMF whatever, access to IMF resources, and still seen as not down in the dumps. It's okay country, you know. That change in mindset has to come. I don't know how long that will take. Until that happens, I think self-insurance and regional arrangements will not only continue, but will strengthen.
Okay. Any other questions? Yes, two over here.
Dr. Subbarao, I'm Stephen Cohen at Brookings across the street, although I lived in Walter for a year, many years ago. Question I have pertains to the agricultural sector. And you pointed out that it's been a bad monsoon and there may be more bad monsoons. Do you have a systematic way of evaluating the effect of climate change on the economy? Do you look at this over the long run period, and if you do, does it shape your policies?
Central bank mandates as yet don't extend to climate change, but we'll leave that to you.
Yeah, frankly, it's a very relevant question. I don't think I have a reasonably coherent response to that. But I can see as I travel around the country, as I live in the country, that climate change is affecting agriculture prospects. And it's in fact more visible in a country like India, the desertification, the lowering of the water level, air pollution. So you can see all that more in a country like India than you see here, although you talk about it more perhaps here. So it's affecting us. What should be done, how countries must get together, common but differentiated responsibility. Our ambassador is here. I will, would you respond to that?
I think we have, as part of our National Action Plan on Climate Change, different missions, and one of those missions is a mission on sustainable agriculture. We also have one of the missions as science for climate change. So clearly this is very much on the agenda. How do we look at developing agriculture in a way which could reduce vulnerabilities to climate fluctuations, and what are the steps we need to take? That would very much be part of the mission on sustainable agriculture.
I might just mention, too, that we did a big study here at the Institute a couple of years ago on the impact of agriculture in all the major countries and regions from reasonable projections on climate change. Bill Klein did the study. I don't think he's here today, or I would ask him to give the result for India. I forget what it is.
I know what it is. I'm going to teach it in 15 minutes.
Okay.
I think the effect on agricultural productivity in India is amongst the highest adverse effect, including sub-Saharan Africa. And Bill's projections are that long-term agricultural productivity will decline in India between 23 and 38%. It's amongst the highest in the world, negative
So
impact.
big impact.
Yeah.
Big impact is the answer. Yes.
Gentleman behind you.
And then to the ambassador.
Thank you. Paul Eckert from the Reuters news agency. I wonder if you can give, from India's perspective, a report card on the G20, since it has been elevated as the premier talking shop for global economic problems. And in particular, feel free to address this if you can, that country that, with the currency policy that should not be named, was said to be a major inhibiting factor in discussing currency at the G20. That's what our sources told us over the weekend. Thank you.
You know, obviously I can't answer questions with a political dimension, but on G20 itself, I want to say that I've seen the G20 before the crisis, I've seen it during the crisis, and I'm now seeing it after the crisis. Before the crisis, it was an effective forum, a club for governors and finance ministry officials and finance ministers to talk about issues of common interest. It was useful. During the crisis, it was an extraordinarily effective forum. In my view, when the history of this crisis is written, the London summit in April 2009 will be seen as the turning point in the crisis. Not because anything substantive happened there, but because the world saw that all the leaders were there at one point, agreed on combating the crisis, and ready and willing to do whatever is necessary. So during the crisis, it was an extraordinarily effective and credible forum. Now, as we are getting out of the crisis, there are differing views on how it must evolve. And these are not necessarily, well, I don't speak for the country, I don't speak for India as I see, but my own personal view is that it pays to see that G20 has a rather narrow mandate and restricted to economic and finance issues so that it is effective and continues to be effective. Not only do we need to be effective, but we must seem to be effective. I think it's very important that any dissension or difference of opinion in G20 not come out. Because even if the world sees that there is break in G20, as indeed some papers have written, even as I don't know to what extent they knew what was happening, but in the run-up to the G20 meeting and shortly thereafter, some media have reported that there are disagreements within the G20. So if that gains currency, I think that's going to erode the effectiveness of G20. So the responsibility of the members of G20 is to see that they discuss differences intelligently and disseminate those differences intelligently.
Last question, Mr. Ambassador.
Thank you very much, sir. And Mr. Governor, congratulations on the tremendous performance of the Indian economy and your capacity to manage your prices and your monetary sector. And in the middle, everybody else is having a problem with growth. You have 7%, and they're complaining you have too much reserves. So fantastic.
This is the ambassador from Jamaica.
Thank you. I wanted to ask a rather parochial question back to the agricultural sector. India has been for many years, or ever since, largest producer of the world in sugar. And you had a monsoon last year, but you've never been an effective factor in the price of sugar. Now, the price of sugar has gone through the roof. And I'm asking whether this means that India is now becoming rather more involved in the trading of sugar, as opposed to merely being a producer and consuming whatever you produced.
Again, my experience on that issue is limited. I knew when I was in the ministry until 2 years ago, I know that the prospects of sugar had shifted very dramatically. We had a glut, then we had scarcity. Now sugar is one of the main factors behind this episode of inflation. So I do not know, but what I do know is that India has the potential to affect world prices because of the big size of the Indian market. So even when there is an indication that India might access the world market, prices respond to that, and that's an important consideration for us as we import or export into the world markets. But I don't know enough about sugar and our policy on sugar to respond to your question.
Okay, Governor Subbarao, we thank you very much. This was terrific. We wish you the best of luck. Sure, thank you.